Okay, folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond, and it is the first Thursday Night Stock Charts Live of 2020. And we're going to talk about tonight the weekly charts, how they're setting up to close for the first week of 2020, and what influence that will have on our trades moving forward. And I'm going to give a couple of seconds for people to populate in here. We didn't get that alert out to people that we normally do, that 15-minute alert, because frankly, I forgot all about tonight's broadcast. So let's take a moment to bring up the weekly charts. And what we are seeing is a tremendous amount of inflation. And when I say a tremendous amount of inflation, I mean inflation across every spectrum imaginable. Stocks, bonds, commodities, you name it, we have inflation. And case in point will be, hey Eric, how you doing, Bob? Case in point will be a chart that I'm going to bring up of the TIPS, Treasury Inflation Protected Securities. That's the wrong symbol. Okay. Now, the Federal Reserve likes to say that there is no inflation. And nothing could be further from the truth. I want to get my annotated chart up here, because we're going to begin tonight off with the TIPS weekly view. And what we're seeing here is fear. And what I mean by that is fear on the part of institutions, fear that there is inflation. And what are institutions buying? They are buying Treasury inflation protected securities. They only rise when you have inflation. And we have put in a new yearly high on the TIPS. We are very close to breaking out to new all-time highs. All-time highs were set last year. And we are poised to break through those records this evening. Eric, good question. Will the S&P pull back? Yeah, it will. No doubt about it, it will. Right now, to fight it is a little bit silly. But we're going to get a pullback here, I think, in fairly short order. So I think it's a great market for momentum trading, but it's also a great market for buying the dips as well. Volume wasn't all that bad today. So I think the path of least resistance remains to the upside. And if we get a breakdown on the daily charts, we'll be looking for a dip on the weekly charts to go buying that weekly dip. So as it stands right now, the Federal Reserve has the back of the markets. The markets know it. They're sniffing it out. But unfortunately, bond buyers are sniffing it out as well, vis-a-vis the TIPS. They know that inflation is coming. It's here, and it's going to grow ever more dangerous. So you're seeing it also with gold, of which we are very, very long of. We went to the day hedged on our gold mining trade, which is NUGT. We booked our profits. I'll talk about that trade in a moment if people are interested. And we got to pull back on the NUGT. We bought dust on the 31st, and we booked those profits today on an intraday dump of NUGT. Hey, Richard. Happy New Year to you. Eric, maybe up tomorrow, then down after that for a while. Yeah, anything's possible. We'll take a look at the S&P 500. We'll take a look at how it looks. Right now, I I do have a small short position on the S&P. It was working. It didn't work today. I'm willing to give it a couple of rounds to see whether or not we're going to get a reversal bar in the next few days. So, more to come. Happy New Year to you too, Richard. So we'll keep an open mind. The first January is always an influential month. As goes January, so goes normally the rest of the year. Hey, Cherry Trade. I remember that name. Good name. Good evening. Happy New Year to you. Okay, so that's gold. Gold is moving up higher. We're off the highs of the week slightly, but we're looking good here. I'm not going to be the least bit surprised to see gold get a pullback. NUGT, the GDX, the GDXJ, all get pullbacks. Why? We'll talk about that in a moment. Hey, Patrick. Good day today, right? Thank you, Trey. So we went over the tips. The tips are looking good. This is the yield curve. We'll come back to this at some point in time in the future. I'm short of S&P also. Going to stomach it for a while. Should be rewarded though. Yeah, I just wouldn't go, in this type of environment, I wouldn't go averaging down. That's the worst thing to do right now. You can carry a losing position for a while as long as it's a small percentage of your portfolio and you're not hoping when you should fear by adding more to a trade that's not working for you. And then when you get that reversal bar, the bearish key reversal, a bearish engulfing bar, then you step up to the plate, add a little bit more to the trade. But no reason to go adding more right now to the short side. I don't see a reason for it. Good, Patch. Glad to hear it. Cool. Good day. All right. I'm not going to talk about the yield curve because the yield curve is steepening, which is technically bearish. What I do want to talk about are yields. Now, yields, this is as of the 30th, I believe, of the 31st. I don't think there were the highs of the week on yields. So this may be a little bit inaccurate, but we are up on the week. We haven't put in a new intra-week low. So you're seeing yields rise. And if you're bullish on gold, you're bullish on the gold miners, the correlation is usually when you're not in a stagflationary environment. They usually trade inversely of one another. Not always, but usually. Okay, I'm going to go over them. Yep. And Boeing. Okay. Okay. You got it, Richard. So yields, we're seeing a little bit of strength on this week. Not a little bit, a lot of it. Daily chart. I'm not sure whether it says daily for whatever reason. Update. That was weird. It was showing me a yearly chart on the daily setup. Strange. So you can see that, yeah, yields pulled back today. It didn't reflect it on the weekly chart. But we are up on the, are we still up? Hold on. We closed at 1.88. Yeah, we're right at the lows of the week. So we're flat on the week. So the fact that we didn't make a new weekly low should be a bit concerning for those who are hoping for lower yields. And when you take a look at how the banks performed today, they performed very, very well. I just want to go to a daily chart here. Broke out of a bull flag setup. Very powerful move. When I see the banks break out the way they're breaking out right now, my bet is that you're going to see rising yields, interest rates. And the reason for that is that the banks make more money in a rising interest rate environment. Their NIM, net interest margins, expand. So today was a good day for the banks. That makes me a little bit concerned that we may see higher yields and it may pressure the price of gold and the miners down a little bit. So just a little bit concerned there. And when you take a look at the dollar today, let's see, the dollar popped up higher. There's something wrong with stockcharts.com today. Oh, this is as of the 31st. That's why. Let's go to the UUP. And here you have it. The dollar popped up higher today. We recaptured the support level. Yes, we were a bit oversold, but we did bounce back nicely. Now, gold, the miners, silver, they were able to shrug off that strength. But the question is, for how long before we get a pullback? Now, I did some analysis of NUGT in particular. Now, NUGT historically, going back to 2015 into 2016 and forward, I did some analysis, and typically, once you pierce the third standard deviation Bollinger Band, you get a pullback. It takes about 9 to 10 days, using a daily chart to correct and find a bottom. That correction on average is roughly 19-20%. We haven't had that correction yet. We've just proceeded higher. But on the 31st, we were down. Today, hollow filled candlestick, a little bit of indecision in there. Might we move up higher? Sure, anything's possible. But I'm just a little bit concerned. So what we were doing today, we were selling puts. We closed out our short position on the miners. We were using DUST as another hedge. We booked those profits. And we have covered calls which expire tomorrow. So I'm feeling good about the trade. We're looking to add more, but on a pullback. And on that pullback, members understand exactly where we'll be looking to buy more NUGT. But it needs to come to us. We will not chase it up higher. Too many warning signals out there right now telling us, don't get greedy. Be patient, because ultimately you know that NUGT will come back down and come to your price point. So just show patience. Now, moving on to the weekly charts. Let's see. Yeah, and Patrick, you make a good point. We were a lot higher this morning in the pre-market, and they did the same thing the morning of the 31st. And what did they do? They dumped it. So I get worried when I see pre-market activity that is very, very aggressive to the upside, especially when you're seeing strength in the U.S. dollar, bonds rallying. And I mentioned that this morning on swing trading today. It was concerning to me. And I even said we were breaking out. I'll even go to the chart. Patrick, you were on. We were on swing trading today, 5 a.m. in the morning. Patrick's in the Eastern time zone like me. A couple of lunatics. Here's NUGT, 4-hour chart. Actually, we're looking at gold, not NUGT. Gold. And gold, I had just gotten done saying, we're going into the day, we're short of the gold miners. It was a hedge on our long position of the gold miners using DUST. And I was concerned about gold possibly rolling over here a little bit, correcting, because the dollar was strong. Bonds were pulling back at the time. They ultimately began to rally. And at the same time I'm saying that, we began to break out on a 4-hour chart of gold. And ultimately, we did begin to pull back a little bit here. This is still a strong chart, but not immune to a pullback, okay? And ultimately, I hope that we get that pullback, take some of this froth off, nice consolidation, wipe out some of the weak longs, and then we load up the truck at a price point of our choosing. So very, very good day today. And DUST, we booked profits on. I'll do a video on this one, I guess. I haven't done post-trade review in a while. And it wasn't a bad close on DUST. But here was the morning. We were down, we reversed, and we made profits real. Richard wanted to talk about Boeing. We were up today. Let's go to the weekly chart, or the monthly chart actually. Go to the annotated version, bear with me. So far Boeing has had a stay of execution from breaking that neckline on a monthly basis. Here you have it. We held support. No new monthly low. Stokes is still in a decline. RSI is still in decline. So the monthly chart is still a basket case. And here's the head and shoulders setup. Left shoulder, head, right shoulder. You don't go shorting on the hope that it breaks the neckline. You short on a break of the neckline. So I'm in no rush here. Maybe it won't ever break the neckline. Weekly chart. So far this week, we have a bullish reversal week. Volume light, no shock there. Daily chart. Daily chart's not looking that bad after today's price action. We have a higher low on RSI. We have a W formation which is formed on the stochastics. Now we have a higher low. A W formation which is formed on the daily time frame. But you couldn't pay me to go buying these shares. The reason is that there's way too much overhead supply. And if this market decides it's going to roll over, Boeing is probably going to be one of the first ones to take it on the chin because it's weak relative to the overall market. So I would avoid these shares, despite the fact that we may still have some fuel in the tank to the upside, but probably only as long as the market holds up as well. Moving over to Arthur. Arthur usually follows Boeing. All right. Nice setup. IPHI, RL. Okay, we'll go over that for you. Hey, Sam. Bob, a question. Do you use COT data? What is that? Maybe I'll have to Google that. Can you give me a little more detail on that, Sam? Let's take a look at the S&P. Where's my S&P? Dow Transports are looking really good. Before we go to the S&Ps, Dow Transports are looking outstanding. The Commitments of Traders is a weekly report released by. No, I'm not familiar with it. Can't say that I am. You like it? Is there an electronic copy? If you have a copy, I'll take a look at it. So the transport's looking very good here. We broke out last week, this week, a continuation move higher so far in the week, a bullish key reversal bar. IWM is struggling, holding on. Here's the S&P. Man, it's extended. This is a quarterly view. We have a new quarterly high, a new yearly high, new daily high, new monthly high. Daily chart. Breakout today, broke out today. On volume, that was about average, reasonable. RSI continues to rise. I see no divergences here. You know, all these indicators are long in the tooth, but you know, I always use the saying, the markets could stay irrational far longer than you could stay solvent. So the path of least resistance remains up. I resign myself to it, and it's as simple as that. Basically, you can compare speculators with dealers' position. Okay, that's interesting. I'd be interested in that. Any little bit helps. And all right, Richard, the IWM. I'll go back to that. All right, so weekly view, we are holding on to a breakout point. We're down in the week still, ever slightly. So we're flat in the week. Holding on to the breakout point. We did break out last week. We closed off the highs of the week. Daily chart. Now, here's where things get a little bit dicey for the IWM. You know, you've been seeing a lot of filled candlesticks, and then that led up to the sell-off. You had another one today. Volume was good, but a good amount of it. Let's go to a 15-minute chart. A good amount of it was selling. And a very, very good back half of the day. That's what salvaged the day. But not pretty intraday price action. So I would still be concerned about the IWM. And if the IWM begins to break, you have to worry about everything else too. Yeah, I think the biotechs RL, let's bring up, I know LABU closed down, yeah, by about a little over 1.75%. Let's go to, as a matter of fact, let's go to a daily chart of LABU. I want to see what support level we're at here. Oof. Not pretty. Not pretty. Stokes are very, very weak. I would avoid the biotechs. Bitcoin was taking it on the chin the last time I looked. I'd be worried about Bitcoin here. And it should have rallied today with inflationary fears, but it didn't. Emerging markets ripped today. Here's a weekly chart. You're going to see more of this. Emerging markets moving up higher as the dollar begins to weaken. We had a pop today in the US dollar. I think this is just a short covering rally on the dollar. Ultimately, we're going to roll over. And you're going to see emerging markets really begin to take off. And in fact, if you take a look at this chart here, you have a big, fat W formation which is formed. And last week, we broke out above the pivot point on the EDC at 89.85. So a clear breakout. Richard, NASDAQ had its best day in 3 months with breadth only 500 plus. This rally was only with a few big caps leading with Apple. Any comments? Yeah, well, you see that typically at the end of a bull run, right? They bid up the institutional favorites. Look at Apple. I mean, you have RSI on Apple at 87.51. Think about that. This is the largest company in the world by market value, at market cap. And we have RSI at 87.51. On a daily basis, we have RSI at 84.61. Four-hour chart. Intraday RSI, 4-hour basis, 86.54. You know what I'm thinking? Thinking about financing some puts on Apple. RSI 2-hour basis, 81.64. Wow. This is bizarre. This will not end well. Monthly chart. More to come on Apple. RL, Baidu. We'll take a look at that. Eric, tomorrow is the last day of the Santa Claus rally. Sam, if I am not wrong, got data suggests dealers almost at the extreme position. It's almost done after Fed stops repo. Supposedly they're supposed to stop that, in April, something like that. We'll see if that happens. My bet is that before all is said and done, if I'm right about yields, if yields catch a bid, I mean, take a look at today. Members, we're going to talk more about Apple. We're going to come back to this, possibly a short. I don't know about tomorrow, maybe early next week on a move higher. I'm liking that trade to the short side. Because, if you're out there and you're saying, you don't know who I am and what I do, I take a look at a chart like this and the word unsustainable comes to mind. The key is you can't just go shorting it willy-nilly. You need to wait for the markets to send you a signal that it's beginning to break down. It could do it in any number of ways. And I'm not seeing a short signal just yet on Apple, with the exception of the fact that RSI is at well above 84 now. That's not enough. It can go higher. So we'll be taking a look at the intraday charts, seeing whether or not we're seeing any lower highs on an intraday basis, some divergences on the indicators, and that'll tell us whether or not we're losing momentum and whether it's safe to begin nibbling to the short side on Apple. But my guess is, in all probability, despite the fact that RSI is well above 80, we're probably going higher here. It's crazy. Baidu. Let's bring up Baidu. Wrong chart list. Nice. All right, so just be careful here. I mean, it's had a great run, but you do have a lot of resistance right here at the 140 level, 139.60 level. It was resistance back here, support back here in February of 16. There was some congestion there. It was support. Then support once, then twice in 15. So just be careful. Monthly view. Yeah, you have a lot of overhead supply here. So I'd be careful about opening a new position into resistance. If it does continue higher through that resistance level, watch for a filling of the gap, which opened up on May the 17th, and that was at 150 per share. So the chart looks good. It's probably going higher here. Beware the third standard deviation Bollinger Band. Look what happened the last time it hit it. Pulled back in a very big way. I saw that. I got the alert, Eric. Let's go to STNE. Be careful here. You long of this, Eric? Just beware of a couple of things here. I thought it was going to go down. No, I missed it. You'll get your chance, Eric. You'll get your chance. Don't worry about that. Because you have a couple of things going for you. And I frankly think it's a safer bet for you. Because a couple of reasons why. I'm confident that you'll get into your price. First thing is I have to bring it up. It's always a pet peeve of mine. We're leaning into the third standard deviation Bollinger Band. We closed above it. For those not familiar with the third standard deviation Bollinger Band, in short, I'll save you the technical jargon. We're not supposed to be here. And in all probability, we are going to pull back. If you take a look at history, typically when we hit that Bollinger Band, soon thereafter, we're getting a pullback. You saw it back here, pullback. You saw it here, pullback. You saw it here, pullback. Here, consolidation, breakdown, so on and so forth. So I think what's going to happen here is that you may even get a new intraday, not an intraday high. You may get a new daily high tomorrow. But I think ultimately what's going to happen is that you're going to get a pullback and a retest of 41.88. If we close down below that support level, you want to avoid it anyway because it's a breakout point failure. It's a bull trap. However, if we pull back and we hold that 41.88 level and we retest it and we close back above it, that's good stuff. That's your signal. And then as soon as you get in on a close above, let's say we pull back, trade down below 41.88, only to reverse to close back above it, bullish key reversal bar. That's great stuff. That's when you enter the trade, put a stop loss right underneath, and you're good to go. I think the Stokes look really good. RSI is looking really good. I think that's going to be the ultimate outcome here. Volume is very good today. Let's take a look at the higher level view. We'll go with the weekly chart first. Oh, look at this. Nice. Nice clean breakout. Very, very nice. There's nothing not to like here. RSI hooking up. Stokes hooking up. Very pretty chart. Monthly chart. We have broken out above the November highs. Resistance up at 45.62. And you have more resistance at 44.50. So these buyers back here that bought at the top of these candlesticks, they're going to want to get made whole. So even if you get a surge higher tomorrow, you're probably going to get a pullback early next week. I wouldn't worry about it. You'll get into your price. That 41.88 level, that's the price to watch. Oh, it got publicity today. What's the typical volume? Let's see. Daily volume. Did 4 million shares today. Average volume about 3. Not even. About 2 million shares per day. A very pretty chart. Very nice chart. McDermott is in talks with lenders to file bankruptcy, and it's an oil company. Really? I didn't hear that. IPHI. I knew I was missing one. A nice setup here. Little hockey stick action on RSI. No breakout yet. Stokes began to roll over here. They're beginning to hook back up. Good day today. Volume light. Higher lows, ultimate oscillator. Let's go to a weekly chart. We have a bullish reversal bar. The one thing I worry about, and it's a holiday abbreviated week here, so let's just say that, right? I know it's the holiday, it's been abbreviated, but I'm going to say it anyway. I don't like the volume, declining volume. I don't like the trend of volume. So that may alleviate itself next week. It may become all about nothing, but I'm going to mention it nonetheless. Let's update this. RL, what are you looking to do here? You own it or are you looking to buy it? Thanks for that, Sam. All right, so RL's not getting back to me. He's probably got busy with something else. All right, so it's a nice week so far. We can't ignore the Tesla got upgraded. I'll take a look at that chart. I was looking at it at the end of the year in 2019. It's time to take a look at it this year. I really like the setup on Tesla. I would be a buyer on a close above 77.67. We have to get through this overhead supply here. And I'd like to see some daily volume. And just take note of MACD. The histogram is trending downward. So I would wait for the breakout. Too much overhead supply here and not enough volume yet. Let's go to Tesla. Let's go to a monthly chart first. Very nice breakout. Very, very nice breakout. All right, back to the weekly chart. We're extended here. We can go higher, but we're extended here. So I'm going to assume that that upgrade was this morning. Cherry, can you confirm if that was this morning or intraday when it was trading? He woke up. All right. All right, so a nice day today. Volume was meh. Stokes are beginning to flatten now. We may see a hook up here. Chart still looks good. You know, while long from down here, I would just put my stop, raise that stop right below 402.08. Okay, thanks, RL. Appreciate that. So Tesla, very nice. All right, with that, I think I'm going to segue over into a members inner circle group. So members, I'm going to send out a link via email to you. If I could ask you folks, if you could just please click that like button, it helps me out the YouTube algorithm. I'd appreciate it. And thanks for coming by and hanging out with me on a Thursday night. I really value your presence. And please join me every Thursday night and Sunday nights. We do Sunday night stock market futures live. And if you're up 5 a.m. Eastern Standard Time, like a few of the folks on this live stream tonight, we're up at 5 a.m. Reading the charts, and we're having a good time very early in the morning. So please hit that subscribe button and do all that stuff. Like, comment, whatnot. You're welcome, Eric. Have a great weekend, RL, if I don't speak with you. Patrick, yeah, no, I saw it pop up. Question is, how does it open up at 9:30 tomorrow? All right, folks, I'm going to send out the live stream alert to members in the circle. Thanks for joining. Everybody have a great night and a profitable trading day. Be well.